Some weather updates about South America, the explanation about the wheat upside that was anticipated by Mike Zuzolo, and yet the rebound in the corn and soybean values. We are going to talk with Mike Zuzolo right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. Stay tuned and don't forget to subscribe. So, Mike, I think you are eager today to talk about the wheat price because you have been talking for a long time that there was a looming upside in that market.
Yeah, and I think we've reached a key point here by getting to the highest levels in the hard red wheat since May of 2014, Luis. And two of the things that have been really important for driving the upside to higher price levels than where we're at right now for me has been a continuation of dry weather in the US Southern Plains, hard red wheat belt, and also Argentina's Pampas. And it looks as though both of those regions are going to experience a chance for a weather shift to a wetter pattern and a wetter bias. And so between a outright price target getting hit by getting up to those 2014 levels of the springtime. The cycle in the hard red wheat at this point has had a very nice 10 to 12 week cycle, 5 to 6 weeks higher, and then 5 to 6 weeks lower or sideways in the case of the last few months. So that cycle is mature with us running about 6 weeks higher since the last low. And I think also the weekly export inspections were probably the other thing that I noted on Monday. Here in the United States, they were just dismal. I mean, that's all you can say about it. 5 million bushels of wheat exports for the week, and that's just not going to cut it. So I think it's indicative of some demand rationing. So putting all those things together, I just wanted to get some hedges done in the 2022 and begin that first increment of hedges for 2022 and wrap up the end of the 2021 hedging cycle at this stage. So as of today's opening, after putting out a text message blast to all the clients and subscribers, I did go ahead and move forward with some hedges.
I was going to ask if you think that is going to last for a while because there is a say in the market that you can get wheat from anywhere in the world. So there will be some harvest is going on in another place very soon.
Yeah, and I think the answer to your question is it could be very easy to go higher if either Argentina or the US Southern Plains don't receive rains in the first week of and second week of November and replenish soil moisture. And I would say if we don't see rains, that could impact a surge in prices and short covering in the wheat, the corn, and the soybeans. And I think it's really worth noting that the managed money funds are net short again in the soft red wheat. And so they are in a short position. They'll probably try and short side of the spectrum, but I think they'd run very quickly out of those positions if the weather did not perform for them like they think it should. So this forecast we have is tentative because it's 7 to 10 days out, and the models just aren't very good after 3 to 4 days. So that's I think the point that I'd like to. Something you and I have talked about a lot. We're in an inflationary mindset. And given the fact that we're hitting 7-year highs in crude oil and in unleaded gas, and given the fact that China's thermal coal prices are, upwards of 200, we are rationing demand in commodities, but we don't know how much. And I think more importantly, we don't know whether what comes first is the desire by end users who are increasing their inflationary expectations to buy extra. And I think that could be because once they begin to go up, it's very hard to get people out of that mindset. And so end users stop going from just in time buying to let's secure 2, 3, 4 months worth of needs because the price is just going to be higher 30 or 40 or 50 right now before our eyes. So it makes it very difficult to pinpoint exactly how much demand we may be losing. We may not be losing any demand. It may be that they're buying demand ahead and just pulling their needs forward. And so that when we get to March, April, May, all of a sudden we don't see that much new export business anywhere. And I think that's a real possibility, if not probability. So it's going to make it real difficult for us on the hedging side. to know where the demand destruction's at. So for that reason, I think it's really important that clients and subscribers really need to want to diversify positions. Generally speaking, though, I just did an inflation update. Go to globalcomresearch.com if you'd like to get a copy of that for free, since you're listening and watching Luis's show. What I have found in my research is it's more likely that cash prices and spot prices will remain firm for the next 3 to 4 months. It's the futures markets that could have the swings to the downside because of the funds and the investors.
Yes, well, prices are always key, but there are some other aspects, and I think the top aspect is always profitability. So, how are you seeing profitability in an environment that the
Yeah,
costs are
I'm glad you
increasing
brought
so
that up
much?
because you and I didn't have a chance to really talk that much before this week's program. And I saw a news article from the news wires that Brazil, I think it was IMEA, was saying that Brazil's fertilizer needs for the winter were covered. And we had talked about that last week and whether that had you after I answer. But very briefly, ADM gave their quarterly earnings update just today, as a matter of fact. And their CEO commented about, yes, they see higher fertilizer prices, but they're not seeing an acreage based shift away from corn to soybeans yet. Well, my producers, especially those that plant corn after corn, that they will go back to a corn bean rotation because the disappointing yields 2 years in a row, essentially, for the corn on corn acres. And so between the fertilizer price they expected, I think it's going to be very hard to get above 90.5 million planted acres in here in the United States in 2022 corn plantings. And that's what I'm going on record for at this stage of the game. And I think there was an IHS market acreage up. I just can't see that much of a corn acreage base, given the fact that fertilizer prices are so high and even the availability of fertilizer is in such question.
Yes, and I would like to talk more about corn and putting South America in the picture because we are seeing that a significant progress at the planting in Brazil, significant weather issues there. But well, I think given the fact that for the last 5 or 6 years, one out of two had significant problems for corn growing, do you see that this will have Brazil will have to?
Well, and I'll throw that back into your hands based upon how you answer. What we talked about last week was the safrinha crop in Mato Grosso, and that the fertilizer needs there maybe haven't gotten secure tracks. And this came from you last week that contracts in Brazil by producers may be looked at extra hard because they may not be able to get their fertilizer needs covered, and so their contractual obligations. So I wanted to get an update from you on that because it sure seems to me that even if you get the acreage in on the second crop, that safrinha corn crop in Mato Grosso, the yields may be one of the lowest in the last 5 or 10 years because are they going to get the fertilizer applied? And do they apply fertilizer before planting, or do they do it mostly after the corn is up out of the ground? And kind of like to get some information from you on that as well.
Yeah, yeah, a lot of producers do that in the last time, in the last moment possible. And yet, I think that the corn acreage in Brazil has grown so much that it's very hard to not have at least one region with significant drought. And given the fact that the crop is
But as
less
far as
resistant than
fertilizer
soybeans.
supply, do you see any issues with them not having the full amount of fertilizer, and therefore their yields and their production could be down because they didn't get all the fertilizer application they needed down, or is this fertilizer supply problem?
Yeah, that's the major worry of most producers in Paraná that they will have lower yields
Because of no
this
less
season.
fertilizer supply to be
More,
able to, yeah.
more about the fertilizers than the weather.
Okay, that makes sense. Yeah. So I kind of feel like that, the 100 million metric ton mark for Brazil is going to be tough to attain, for corn production, total corn production. And it wouldn't surprise me if they come in closer. Trade may trade something differently than what I'm thinking, because that's kind of how I do my analysis is I kind of look out from a standpoint of what the stocks to use ratios could be on the low end. And the trade tends to look at the high end of production levels is what's overvalued and what's undervalued. And a lot of times that's based upon good production or bad production, good demand, bad demand, based upon the currency exchange rates. And I would say to you, for me, in my price expectation, 3 months, than what the Brazilian production supply, potential is. To me, you're going to maybe move the needle 1.5, 2.5% on production based upon weather and supply of fertilizer. And maybe you could do it more like 5% production swing is more likely to be seen given they've got some better moisture levels. But the currency could make a real big difference in prices.
And how are you seeing soybeans? Because soybeans is very different from the point of view of South America, because there is a lot more volume produced, more acreage expansion, and yet
Yeah, that's
the
right.
crop
And I think this is
resists
where
more.
the market has probably priced in the USDA supply of 300 million bushels here in the United States, but they may have to walk that back some if it stays wet in the Corn Belt, because from what I'm hearing from producers, it's going to be really difficult to get that last 40% of the soybeans out of the ground at this stage if we turn off both cold and wet. And so we'll probably lose some bean production here in the United States, and probably enough. That's the short term. That's the next 30, 40, 50 days. What I would say, though, in the more farther out looking reaches, Luis, is that this year, it sure looks to me that we will have a decent supply here in the United States. We will have a decent, so more of a buyer's market. In other words, China could probably work both countries, prices back and forth, and the demand and the export market, they can choose more readily instead of having to be forced to buy US. So I think we, as analysts that work with soybean producers, we need to realize that 2022 could be more of a buyer's market, whereas in 2021 it was much more of a seller's market. I think we really want to kind of formulate our marketing plan as such.
Well, I think you helped me with the title of this video right now. So, anything else to conclude, Mike?
Yeah, please go to globalcomresearch.com and sign up for a trial, because I just did a big update on the cattle. And I know a lot of the Argentines and the Brazilians like their beef just as much as we do here in the States. So go ahead and sign up for a trial and take a look at some of my latest blog posts on the livestock markets.
Thank you.
Thanks, Luis.